If you're looking at the energy futures markets right now in Houston, Calgary, and London, you're watching a number that hasn't moved this violently since the Arab oil embargo of 1973. West Texas Intermediate crude just spiked 11.4% in 23 minutes. Natural gas futures in the Northeast corridor jumped 18.7%. The Canadian dollar, which Trump predicted would crash into the basement, actually strengthened by 1.8% against the US dollar, because every single commodities trader on the planet just realized something the White House apparently forgot. Mark Carney controls the tap, and Donald Trump just dared him to turn it off. Before we dive into what just collapsed in that room and why your heating bill is about to become a political weapon, hit that subscribe button and tell me in the comments whether you think Carney is playing with fire or if this is the only language Trump understands. Your engagement funds this independent analysis and keeps us digging when everyone else moves on to the next headline. 53 minutes ago, inside a private suite at the Four Seasons in Washington, D.C., not the White House, Trump insisted on neutral territory. The largest energy deal in North American history died before it ever took its first breath. The meeting was supposed to be a photo opportunity, a handshake, the signing of a memorandum of understanding that would have locked in $865 billion worth of energy infrastructure investments over the next 12 years. New pipelines, upgraded refineries, joint liquefied natural gas terminals, renewable energy partnerships, the kind of deal that creates 340,000 jobs on both sides of the border and cements North American energy independence for a generation. That deal is now ashes. We know exactly what happened because four sources, two from the Canadian Energy Ministry, one from the U.S. Department of Energy, and one from a private equity firm that was financing part of the deal, all confirmed the same timeline. Trump arrived 11 minutes late with Larry Kudlow and a lawyer nobody recognized. Carney was already seated with his energy minister and the CEOs of three major Canadian energy companies. There was no small talk. Trump sat down, didn't order coffee, and immediately pulled out a folder. He slid it across the table to Carney and said, "This is the real deal, the one that works for America." The document inside wasn't the memorandum everyone had agreed to over 6 weeks of negotiations. It was a completely different framework, rewritten with new terms that nobody on the Canadian side had ever seen. Condition 1, Canada would agree to sell oil and natural gas to the United States at a fixed discounted rate, 12% below market price, locked in for 8 years. Condition 2, any Canadian energy exports to Europe or Asia would require written approval from the U.S. Department of Energy to ensure that American energy security wasn't compromised by Canadian sales to competitors. Condition 3, and this is the one that made Carney's face turn to stone. The United States would have the right to invoke emergency override authority on any pipeline or transmission line crossing the border, meaning if the U.S. declared an energy emergency, they could legally seize control of Canadian infrastructure on American soil. Carney read it in silence. The room was so quiet that one of the sources said you could hear the air conditioning hum. Then Carney closed the folder, pushed it back across the table, and said, "Mr. President, this isn't a partnership. This is a resource extraction scheme. You're asking Canada to become a subsidiary of the United States Department of Energy." The answer is no. Trump apparently wasn't expecting that. He leaned forward and said, "Mark, you're making a mistake. We're offering you access to the biggest energy market in the world. You need us more than we need you." And that's when Carney did something that will be taught in negotiation classes for the next 50 years. He smiled, not a friendly smile, a cold, calculating smile, and he said, "Mr. President, let me clarify something. Canada produces 4.9 million barrels of oil per day. The United States imports 3.8 million barrels per day from Canada. That's 52% of your total oil imports. Canada supplies 98% of the natural gas that heats New England in the winter. We provide the uranium that powers 19 of your nuclear reactors. So when you say we need you more than you need us, you're operating on data from 1985. The world changed. You just haven't noticed." Then Carney stood up, buttoned his jacket, and said, "The deal we negotiated over 6 weeks was fair. What you just presented is insulting. Canada is withdrawing from this agreement effective immediately. I wish you luck finding another supplier that can deliver at our scale and proximity. And then he walked out. His entire delegation followed. The CEOs left their coffee cups on the table. The door closed. The $865 billion deal was dead. Within 15 minutes, Carney's office released a statement that didn't mention Trump by name, but made the consequences crystal clear. It read, "Canada entered today's energy discussions with the intent to formalize a historic partnership. We were presented with terms that undermine Canadian sovereignty and economic autonomy. Effective immediately, the Government of Canada is suspending all new energy infrastructure projects designed for U.S. export until a respectful framework can be established." Existing contracts will be honored, but no expansions, no new pipelines, no additional capacity. Canada will prioritize energy partnerships with the European Union and Asian markets moving forward. That last sentence, prioritize partnerships with Europe and Asia, that's the nuclear option. That's Canada telling the United States, you're not the only buyer anymore, and we're about to prove it. Let me show you why this is an economic catastrophe in the making, and why Trump just handed China and Europe a gift they didn't even ask for. Receipt 1, the supply bottleneck. Right now, this very moment, the United States depends on Canadian energy imports for basic functionality. The pipelines that bring oil from Alberta to refineries in Texas, Illinois, and Oklahoma operate at 91% capacity. There is no room for reduction. If Canada stops expanding capacity, if they freeze new pipeline projects, the U.S. doesn't just lose future supply, they lose the ability to meet projected demand growth. The U.S. Energy Information Administration projects that American oil demand will increase by 7% over the next 5 years. That growth was supposed to be met by increased Canadian imports. If Canada redirects that capacity to Asia, American refineries start competing for a shrinking supply. When supply shrinks and demand grows, prices don't go up linearly. They spike exponentially. We're talking about gasoline hitting $9 per gallon in some regional markets by next winter. Receipt 2, the heating crisis. This one is going to hurt fast. 98% of the natural gas that heats homes in Massachusetts, Vermont, New Hampshire, and Maine comes from Canada via 2 main pipelines. Those pipelines were scheduled for expansion to meet growing demand as more homes switch from oil to natural gas heating. Canada just froze those expansion projects. That means next winter, when temperatures drop and demand spikes, there isn't enough supply. Utilities start implementing rolling heating restrictions. They ask residents to lower thermostats to 62 degrees. They impose surcharges for peak usage. Your $240 heating bill in January becomes a $680 heating bill, and there's nothing you can do about it because the gas isn't there. Receipt 3, the geopolitical realignment. Here's what most people are missing. Canada isn't bluffing about Europe and Asia. 2 hours after Carney walked out, the European Commission released a statement saying they're ready to fast-track negotiations on expanded LNG imports from Canada. Germany, which is desperate to replace Russian gas, just invited Carney to Berlin next week. Japan and South Korea, both of which need stable energy partners, have been trying to increase Canadian LNG imports for 3 years. Carney just gave them the green light. If Canada successfully redirects even 30% of its export capacity away from the U.S. and toward Europe and Asia, that's permanent. You don't build a $40 billion LNG terminal in Nova Scotia, pointed at Europe, and then shut it down 5 years later because America wants to renegotiate. Infrastructure is destiny. Once the pipelines point east and west instead of south, they don't turn around. Receipt 4, the investor panic. Within 1 hour of Carney's statement, every major energy investment fund in North America started pulling projections. The $865 billion deal wasn't just government money. It was a framework that unlocked private investment. Pension funds, sovereign wealth funds, private equity, they were all lined up to invest in North American energy infrastructure because it was seen as the safest, most stable investment on the planet. That perception just evaporated. If the U.S. and Canada can't even finalize a deal that benefits both sides, why would any investor put $50 billion into a pipeline that might get caught in a trade war 3 years from now? Capital flows to stability. Trump just made North American energy unstable. That capital is already looking at Middle East solar projects and Australian LNG as safer bets. So why did Trump do this? Why did he blow up a deal that his own energy secretary called a generational win for American workers? Because Donald Trump doesn't see partnerships, he sees transactions. And in every transaction, Trump believes there's a winner and a loser. He cannot psychologically accept a deal where both sides win equally. He walked into that room convinced that Canada needed the deal more than America did, convinced that Carney would fold under pressure, convinced that he could bully a G7 nation the same way he bullied contractors in Manhattan in the 1980s. But Carney isn't a contractor. He's a central banker who has negotiated with the European Central Bank, the Federal Reserve, and the Bank of England. Carney has sat across the table from people far more sophisticated and far more ruthless than Donald Trump. And Carney knows the one thing Trump doesn't understand: leverage isn't about who talks the loudest, it's about who can walk away. Trump thought he had leverage because America is the customer. But in commodities markets, the supplier has leverage, especially when the supplier has other customers. Canada sells oil, gas, uranium, timber, water, things you can't print, things you can't replace with tariffs, things you actually need. When Trump slid that document across the table demanding discounted prices and override authority, he revealed that he thinks Canada is a subordinate, a resource colony that should be grateful for American business. Carney's walkout was a message: we're not subordinate. We're a sovereign nation with options, and if you treat us like a colony, we'll trade with someone who treats us like a partner. Notice what Carney didn't do. He didn't threaten to cut off supply tomorrow. He didn't weaponize energy like Russia does. He just said no new projects, no expansions. We're freezing growth and looking elsewhere. That's strategic patience. That's the difference between a tantrum and a strategy. Trump responds to immediate pressure. Carney applies slow structural pressure. Trump needs a win this week. Carney is playing for the next decade. By freezing expansion projects, Carney put every U.S. senator from a cold weather state on the phone with the White House today, begging Trump to fix this. He put every energy company CEO who was counting on that $865 billion in contracts in panic mode. He outsourced the pressure to Trump's own allies and donors. And there's something even deeper happening. For 80 years, Canada's entire foreign policy has been built on the assumption that you don't say no to America. You negotiate, you compromise, you smile, but you don't walk out. Mark Carney just walked out. Twice in 1 week, he walked out on the trade meeting, and now he walked out on the energy deal. He's sending a message, not just to Trump, but to the world. Canada is done being the quiet neighbor. We have leverage, and we're willing to use it. This is the birth of something new, a Canadian foreign policy doctrine based on sovereignty and reciprocity instead of deference and compromise. If this becomes the norm, if future Canadian leaders follow Carney's model, the entire North American power dynamic shifts permanently. So what does this mean for you, whether you're in Texas or Toronto or Tennessee? It means energy prices are about to become a political crisis. If you heat your home with natural gas in the Northeast, your bills are going up 40% next winter. If you drive a car anywhere in the Midwest, gas prices are going to hit levels that make the summer of 2008 look cheap. If you work in energy infrastructure, the 340,000 jobs that deal was going to create just vanished. But the bigger impact is on credibility. If the United States can't maintain a stable energy partnership with Canada, the most stable trading partner it's ever had, how can anyone trust American long-term commitments? How can Europe rely on American LNG exports if America might suddenly demand override authority on European infrastructure? How can Japan sign energy deals with the U.S. if the U.S. might rewrite terms at the last minute? Trump is systematically destroying the most valuable thing America has, which isn't military power or economic size, it's trust. Every ally is watching this and making contingency plans. Every adversary is watching this and taking notes. China just sent a delegation to Ottawa. They're offering to buy everything Canada wants to sell. There was a moment yesterday that perfectly captures this disaster. A reporter caught Carney leaving the Four Seasons. She asked, "Prime Minister, are you worried that President Trump will retaliate with energy tariffs?" Carney stopped, looked at her, and said, "You can't tariff something you don't have access to. The United States can either be our partner or our customer. Partners negotiate, customers pay market rates. The choice is theirs." Then he got in his car. That's the new energy. Canada isn't asking permission anymore. So Where does this go? We're at the edge of something that could reshape global energy markets for 30 years. Scenario A, the emergency retreat. Corporate America loses its mind. Energy CEOs, utility companies, state governors from cold states, they all call the White House screaming. They tell Trump that if he doesn't fix this immediately, energy prices spike before midterms and Republicans lose the Senate. Trump has no choice. He sends an envoy to Ottawa, probably someone Carney respects, maybe even calls Carney directly. He offers a return to the original deal terms, saves face by claiming he got minor concessions, signs the agreement, tweets about winning. The $865 billion deal gets revived, the pipelines get built, crisis averted. But the damage is done. Investors now know the U.S. is unpredictable. Future deals come with risk premiums. Scenario B, the spiral. Trump's ego takes over. He sees Carney's walkout as an insult that demands punishment. He slaps a 25% tariff on Canadian energy imports, claiming national security justification. Canada responds by implementing the same environmental reviews they threatened before, slowing supply to a crawl. Energy prices explode, inflation roars back, the Fed has to raise rates. The economy slides into recession by fall. Trump spends his last 2 years blamed for $10 gas and loses re-election in a landslide. Scenario C, the New World Order. Canada successfully pivots to Europe and Asia. Within 18 months, 35% of Canadian energy exports flowed to non-U.S. markets. The U.S. has to start importing more oil from the Middle East and Venezuela, countries that are far less stable and far more expensive. America's energy independence dream dies. Canada becomes the energy broker between Europe and Asia, builds massive LNG infrastructure on both coasts, gets rich selling to the highest bidder. 20 years from now, American kids learn in history class about how the U.S. lost its energy dominance because one president couldn't accept a fair deal. Right now, I think we're headed towards scenario A, but every day Trump stays silent pushes us towards scenario B. And if Trump retaliates instead of retreating, we end up in scenario C, and that's permanent. This is the moment. This is where we find out if America can still function as a reliable partner or if we've become so erratic that even our closest allies would rather walk away than deal with us. I want to know what you think. Should Carney have stayed and kept negotiating, or was walking out the only move that would get Trump's attention? And if you live in a cold state, are you ready for heating bills to double next winter because of this? Drop your thoughts in the comments, subscribe so you don't miss what happens next, and hit that notification bell because when this breaks wide open, you need to know immediately what it means for your wallet and your future.